Good morning, everybody. Welcome to the Flow Show. I feel like I looked out my window this morning. It was nice and sunny. I walk out the front door and I'm in the middle of a tornado. Busy markets, lots going on, big week ahead, and looking forward to it. Morning, Kay. How are you, mate?
Hi, good morning, mate. Yeah, still nursing my cold and bit of last shopping to do for Christmas. So after the Flow Show, I'm going to take it easy for the rest of the day.
Yeah, good one, mate. It's just a cold, not the dreaded lurgy or anything.
Still negative, but who knows?
Yeah, that's good. That's good. Well, may that last. Hope you recover pretty quickly, mate. That might as well get out of the way before Christmas, eh?
Yeah, I hope so.
Yeah, exactly. Right, let's get cracking. Because as mentioned, got a busy week ahead, so we need to look at what's coming up and what's going on. Right, as we often do, we're going to kick off in China, and the CPI data over the weekend not looking too good at all. All looking rather deflationary over there. Second month running, we've seen a negative print now, and worse than last month. CPI coming in down 0.5%, was only expected to fall 0.1%. PPI as well year on year, dropping more than expected. So some problems there for Chinese authorities, the PBOC, to deal with. We can probably start expecting further rate cuts and maybe an RRR cut. Maybe a possibility of it before the year end, if not coming next year, early next year, particularly if these numbers continue as they are. Over in Japan, it's been all fun and games over there again, but we'll start with Kishida, who apparently is clearing house and going to be getting rid of all Abe party cabinet members. So all the old guard under Abe, he thinks he's going to be clearing out. According to Yomiuri, the opposition party CDP is going to submit a no confidence motion against Kishida either sometime, I don't know if that's happened already or tomorrow. These things happen quite often, so it's not as inflammatory as that sounds. We've had one. We had one a couple of months ago, I think it was, no confidence vote, but that just shows that there's still things going on politically in Japan. Just we need to keep half an eye on. Nomura has now upped its forecasts for when negative rates in. They brought them forward now to January. So a lot of shifting central bank expectations going on. So they see negative rates ending in January now. We've had more shenanigans and sources pieces about the BOJ. Obviously, we had everything going on with UEDA last week, and then Friday we had a bit of a reversal with as I'm sure Kay mentioned, misinterpretation of UEDA's remarks and this and that, why they may not end easing as quick as the market expects. Bloomberg have done a little bit of their usual, let's take all the other stories and rehash it and add our own spin on it. And they released that this morning, which gave dollar yen another kick up to higher levels back into 146. So bit of a strong reversal we've seen there in the yen. Must have been fun Friday afternoon, Kay.
Yeah, that's I'd say welcome to the world of gamma negative in the options, because if it works one way, it works the other way as well. And I guess that's what we're still seeing right now. But yeah, we had that sources piece out on Reuters already, and we're trading just below 144 then. That put it another big figure higher. And as I was saying on Friday, I said keep an eye on what's going on 145, 145 and a half, and back through there. Could see a bit of an acceleration, and that's exactly what happened. And still, okay, it's a repricing. People have been getting out of positions, probably already some trying to get back into positions, but a lot of it, I still think, is that negative gamma thing going on. So the higher it goes, the more they have to buy back as well. Opposite to the lower it goes, the more they have to sell. No, I don't know when that's going to go out of the market. I have no idea at all. Couldn't find any more information about it. But yeah, it's a constant get me in there and get me back out of there trade right now in the yen.
Yeah,
Whatever the market may do, it seems to be clear that Rueda, sources, people around him were relatively quickly to say like, hey, I haven't said that we are going to change it right now, okay? And they were relatively fast in saying that they're still looking at those wages. They're still worried about the consumption. Yeah, the market needed to reprice the expectations once more. So here we are, I guess relatively neutral compared to where we started the move. Can't take another 50 points, 100 points out of it. If I mean, as I say, we can't call a top or a bottom here. It's all going to be what's happening around around Japan this week, which is going to be the driver. We could be back at 144 if one of the other central banks go really negative or dovish, uber dovish. We could be at yeah, why not 148, 150 one by the time we get back into the Bank of Japan. You know,
yeah,
it's really a tough call. On if you look at the crosses side, we've taken back a lot of what's happening, but I'll show it a bit later. Euro yen is on interesting levels. So there's not much that we can add to what's happening around the yen right now, barring the fact that really deep inside, I'm still not a yen for longer term buying. We see those heavy spikes up in the yen, down in yen pairs, but we've equally retaken nearly 500 points from the lows, and that's not to be frowned upon either.
yeah. It feels, just looking at it with clean eyes, obviously from being off Friday, it looks like these BOJ comments, they might have themselves misinterpreted some of these moves. I mean, they seem to be coming from the angle that everyone's expecting something to happen at next week's meeting. I don't think that's the case. Everyone knows next week is going to be a nothing meeting in terms of policy, and that these price moves are about what's going to happen in the spring. So I don't know if, as I say, these BOJ members have got a little bit too fire lit under their pants, thinking that the market's trading December, and that's why they're forced to come out and say no, it's too soon and whatnot. When not many people were expecting to do anything.
I see what you mean. Perhaps they underestimated the moves that they would create in the market whenever they change something, right?
Yeah.
Perhaps is the case. But again, if you look at the violence of those moves, of course, a big part is the radar, because of course they otherwise they wouldn't be such a move, right?
Yeah.
But I think the bulk of the move, especially when we started to go under 145, 144 and a half, because when you look at some people had some really levels on the futures, and if you look at that was all around 144, 145 and a half, and that's where the acceleration came from. And the lower you go, the more negative, the more people have to sell. If really those options are big enough, if the rumors are just those that have been kind of reported, then it's an oversized move. But I do think that especially people on Twitter or even elsewhere, if it's not coming from really a real trading desk or people in the knowing, we don't know how much there is, because the rumors were for somewhere between $1.5 and $2 billion, but that is not creating a 3 big figure move in the end. It's all that happens around the kicker, the reason why. But here we are back at that level from where the whole fun really started, right? And yeah, in my opinion, rightfully so, because it works both ways. Those things when the market is gamma negative. But now the rest is really, to me at least, in yen, is flip the coin.
Yeah.
It's a real coin flip. I don't know
And
where we are going to end the week. No idea.
Yeah, but I'll mention the why in a moment. But this move isn't all about what's happened with the Bank of Japan. There's obviously been some bits and pieces out the US, which I'll touch upon in a moment, that explains at least the dollar rally part of it as well. But we'll get to that in a moment. Over to the UK, and according to the CBI, the industry body, they say UK interest rates won't be cut until 2026. Good luck with that one. For the CBI. On the political front, I won't go into the details. Those in the UK know what's going on with this Rwanda thing and immigration stuff. According to Michael Gove, he says that the UK is not looking at an early election because of all that going on. So we had the possibility of an early election next year on the back of the Chancellor's autumn statement. Well, that's now looking like it's not going to happen on the back of this immigration stuff going on in the UK, according to Gove. Right, looking at the data. So from, oh, I've lost it. Where's it gone? Last week. Where are we? There we go. Boom, boom, boom. So over in the US, obviously non-farm payrolls was the big number last week, coming in AOK, beating expectations by 19k, so nothing to worry about on the jobs front number, but very good data on the rest of it. The unemployment rate dropping back to 3.7%. That's double good because the participation rate rose as well. So that was more people coming into the market and more people finding jobs. So that was a double positive there for that. Wages holding up as well at 4%. As inflation comes down, then those become better and better for people taking pay. So all solid, soft landing numbers there in the jobs there. No trees shaken at all. Then we've got the Michigan numbers, which again, another decent improvement. Consumer sentiment up a good chunk to 69.4. Expectations up. Current conditions up. The only thing that goes in the Fed's favour is the inflation expectations dropping back. We did have some funky numbers coming in the last couple of months, some big jumps in that, but that's now eased off. 1 year inflation now down to 3.1% from 4.5. 5 year also down to 2.8%. So again, soft landing numbers, good. Positive mood with the consumer and inflation expectations coming down. Soft landing, soft landing, soft landing. That helped take some heat out of the rate cut expectations that have been flooding in for the Fed. Then over the weekend, we got Timmy Leaks, our mate at the Wall Street Journal, out with a piece on the Fed. A lot of it was waffle, but there was one key line in there that he wrote saying that Fed officials aren't likely to entertain serious conversations about when to cut rates this week and potentially for several months unless the economy weakens more than expected. So that might be a little bit of a hint to what's coming from the Fed and Powell, in that they're going to push the line about the higher for longer. They're not going to talk seriously about cuts. So given that Powell the week before obviously came out with his comments, same old, not sufficiently restrictive, blah, 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 and the market gave scant regard to that and carried on pricing cuts aggressively. This has helped, alongside that data, reverse some of those cut expectations this week, and particularly going into the Fed. So the market not as dovish going in as it was before. That could all change tomorrow when we get that US CPI, which is going to be absolutely huge if there's a big variation in that, just because the Fed will be watching it in their two-day meeting. They'll have those numbers. It could make the changes on their deliberations as well. Not that we'll see what they are. So lots to be going on there. As I said, rate cut expectations are dropping. We've seen that in yields, jump in yields. A lot of the repricing now, we're only pricing around 110 basis points of cuts for next year. That was up around 120, 125 last week. Goldies, they're continue with their central bank forecast or reforecasts. Last week they pulled forward the ECB's first cut from Q3 to Q2 2024. They now say the Bank of England are going to cut faster than previously expected. They still see a first cut in Q3 2024, but now they will say there will be 25 pip cuts at each policy meeting until the rate gets down to a level of 3% by mid-2025. Previously, they said we would only cut one per quarter. They've also changed their Fed expectations, brought those forward now. They previously thought the first Fed cut would be in Q4 next year. Now it's coming in Q3. Give it a few more months, that'll be Q2, maybe even Q1, just like everyone else is doing. A little bit on the politics, and 2024 is going to be a big election year for the UK and the US. According to a Wall Street Journal poll, Trump has taken a lead over Biden. Trump is polling at 47% versus 43% for Biden. So, as usual, take these polls with a pinch of salt, but we just keep an eye on them just for their indications of what they might be showing. Kay, you got any other headlines you want to bring to our attention?
No, I think you covered most of it. On the data front, yeah, there was this immediate reaction on the NFPs and on the report, and it is a good report. But a lot of people were saying like, yeah, well, that's the end of the strikes, etc. People coming back in the market. The private non-farm payroll still being revised lower and stuff. So it's been read as only a half good report, and then the Michigan is really a case of communicating vases, right? The lower inflation expectation go, the better the consumer will feel about it. So that looked to have been it. Really, if you look at the dollar moves, it's been really mixed. Basically, we were here in the euro dollar when before everything came out. So if you look at the final effect, it's very mixed, right?
Yeah, very much so. And yeah, it was good numbers from the Fed, and people can explain it ways you like, as they like, strikes and whatever. But it is what it is.
I agree. I still think it's a good number.
Get materially affected negatively when there were strikes. So
yeah, and then but there was this kind of deja vu from last month as well. Remember when we had a very good labor report, and then the dollar did like 20-30 points and then completely reversed. Because it was very taken as extremely good for risk, and there's bits and pieces of that in those Friday's numbers as well, because if you look at the S&P is trading at back above 4,600, just to name that one. The rest of the bourses are all doing relatively okay on Friday afterwards as well. So it's a bit of a game of who's pushing who and who's pulling who.
Yeah, exactly. We're gonna be having that at least for the next couple of days, running into the Fed. Data wise, usually the week after NFP is absolutely dead for data, but we do have some bits, and obviously we've got all the central banks. So just having a look at the calendar. PPI tonight in Japan. Keep half an eye on that, just for the inflationary metrics, what it means for that. Tomorrow, the UK Labour report. Watch the wages data in that one. That's the big watch for the Bank of England ahead of their meeting on Thursday. Obviously, US CPI, that's the biggie there. We're expecting core numbers to come in unchanged at 4%, and the headline, I think, dropping a pip to 3%, if I'm not mistaken. Let's have a quick look if I've got it up here. Boom, 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 boom. This week, let's just do it the easy way. Tuesday. Yeah, CPI coming down a pip, 3.1, core remaining unchanged. So that's going to be a mover. If it's on the screws coming in at 3.1%, then that keeps inflation moving the right way, and it will allow the Fed to, let's say it comes in around 3.1, 3%, something like that. It allows the Fed to keep their higher for longer message going, push back on cuts and whatnot. If it comes in with a 2 handle, I think then the market's going to start ramping up those cut expectations yet again, which then might force the Fed to be a bit stronger in its rhetoric of not letting the market go too far. If we see these numbers going up, and particularly above the prior 3.2%, again, that's going to have the Fed coming out and saying, told you so, job's not done. And the market will undo cut expectations even more. So this is why this data is going to be volatile. It's going to be very hard to pick a trade in the dollar ahead of these numbers and the Fed and trade it with any conviction, because it can flip you around, your reasoning around, in an instant. So that's the one that for tomorrow anyway. This was mentioned as well in some of those stories. I'm not sure if it was Reuters that mentioned it, Kay, that talking about consumption, everything's that, they said that the Tankan report is important for the BOJ and what happens there regards to what they do with policy. So that one's had a little bit of a spotlight shone on it. So we'll keep an eye on that one. GDP numbers from the UK, it's the monthly stuff. Don't worry about that too much unless there's, again, a big variation. It won't have that much influence on the Bank of England meeting. PPI, that comes out before the FOMC as well. So that'll be a little secondary inflation read to keep an eye on ahead of the, obviously, the FOMC later that day. Thursday, SMB is up front with policy. You expecting anything from those guys, mate?
Well, that's always my eternal question. Is Jordan going to signal that he's happy with the level of reserves, the level of the Swiss franc, or are they going to continue to push the boat? CPI came in lower again, well within their target rate. I didn't have like a very, very close eye on economic data, but of what I remember, they are not like really ecstatic either. So yeah, that is one thing that I'm going to watch. Is Jordan going to give the green light to sell a few Swiss francs? That's basically the question. If we have seen that the FX reserves again have come down in November, very surprisingly, looking at the levels already of the Swiss franc. So yeah, that's really a signal that the market is going to look for, and at least I will, and I know a couple of us in the room as well, trying to start to counter these Swiss moves. See if we're going to get some joy out of that. It's a bit of a strange one actually, with Jordan having been pushing that not even the rhetoric. They're actually still buying Swiss franc in November. So that's going to be a very interesting watch on that one, which could create a couple of waves. And I would say especially if it is the case that he says we are done or we're good.
Yeah, that's one to keep an eye on there. So we got 3 central bank meetings: them, S&B, the Bank of England, and then the ECB later on. So all those need close watching. We get the latest forecasts from the ECB, I believe. I think it's this meeting. I'll double check it. So that will give us an idea of what's going on in 2024 at least, which I think we'll talk about these later in the week. I'm not expecting much from the Bank of England, but maybe a bit of a pushback on the sour rhetoric over the UK economy that Bailey's been issued. But there's still far more sticky inflation pressures there. So don't be expecting them to be talking about cuts anytime soon. Same for the ECB, though I think the biggest talking point might be what they do with the end of PEP reinvestments, whether they're going to start it or at least give a hint that discussions have started, and that's to happen in 2024. Now, retail sales from the US. This is could well be quite important, because this comes the first data point after the FOMC. So whatever comes of that, whatever stance they've got, whatever the market's done, if it's been a hawkish sounding meeting, this will put it to the test. If it's been a dovish sounding meeting, this will also add to it if retail sales are pretty poor. So this is going to be important just purely because it's coming right after the FOMC. Then Friday, we get some more Chinese data to keep an eye on, and it's well, it feels like we've just had the PMIs, the final numbers, and we start them all again with all the flash numbers from the PMIs coming out around the globe. So that will finish Friday. But I think we might, a lot of the market might be taking a bit of a breather on Friday after all these central banks and looking more towards the holidays and whatever they've got to do into year end, closing up the books and whatnot. Because after that, we've really only got the Bank of Japan on the 19th, and it's pub time, I think, Kay. It's Christmas time.
Oh yeah, oh yeah.
Looking forward to it.
It's been let's say not a tough year, but a very active year. If we can already look back on it, but it's gone extremely fast again. But I'm going to say that this time I'm looking forward to a bit of Christmas period downtime this year. You know.
Yeah, charge the batteries and all that. Yeah, our last pro show will be on the 19th, just to see what's happened at the Bank of Japan, if anything, and then that'll be it until January. Just to give you a forewarning on that. Right, so let's have a look what's going on. We've already spoken about dollar yen. No surprise to see what it's done. We're getting back up to levels. I've been talking about having an itch to be short. In my mind, whatever the news, whatever's happened, whatever the Bank of Japan said, hasn't said, whatever, this has given us an indication of what is likely to happen when we get final confirmation that they're going to be ending easing, be that via the data that we get, wages in the spring, whatever. You've seen what's likely to happen. Okay, so this has been a bit of a litmus test, if you like, for that. I'm still interested in getting short. I am going to sit back and let the Fed and the Bank of Japan do their thing now, and the data as well. I don't want to start shorting now and then get a hot CPI report tomorrow and we're trading up at 148, 149. So I'm still going to try and be a bit patient. I also don't want to get into a trade that I have to sit on for 2 weeks over Christmas that's just going to cost me money while it does nothing. So wherever we are after these meetings, then I'm probably going to be looking at the early part of the new year to start maybe scaling into some positions, because I still want to be on the short side, but still need to be careful of that carry. So as Kay said, it's a bit of a coin toss what we do here. Hot CPI tomorrow, as I say, we could be up 148s. Soft CPI, we could be back down at 145, 144s. Who knows? And then we get the Fed afterwards. So there's lots of water to go under the bridge here. I'm not too keen to even be trading this on the short term just because of the risk events. So I might even keep the sniper rifle in the cabinet for now, unless something really sticks out at me. Same for the others, really. Bank of England, ECB. I'm not really inclined. I've still got positions in euro sterling and euro dollar, so I'm not inclined to do much but manage those. But we shall see. You never know what opportunities are going to pop out the closet. Price wise, I don't know. It almost seems like folly to talk about, you know, what this is doing, what that's doing, because it's such a big, potentially volatile week. You know, you could say, you know, watch 126, watch 125. Yeah, great. But we could get past the BOE, could be at 127 or 124 or wherever. Who knows? So I've not got much expectation for anything at the moment, I'm afraid, or inspiration for anything at the moment. Kay, how you viewing things? Are you just sitting on your hands a bit? You know, waiting for your opportunities?
You know, I was short euro dollar and then I took it off before the NFP and stuff. But but it's a fraction of what I had before. Just re-entered a little bit long dollar Swiss, but it's all like, if I get taken out at one point in this week, it's not going to cost me my month or so. You know, I mean the kind of the same thing, but I want to keep my theme going just a little bit, just to have like this interest in it as well. And if, for instance, my hunch is correct that the dollar should come out of this week perhaps a little bit better, that Swiss may get a little hammered. It would be a shame not to be in it, you know. And
Yeah.
that's rather the approach that I have this week. But on the sides, I have extremely little running, really. And as you say, and it's a bit of a coin toss right here and now. I mean, even for the euro dollar, we could be at 109 or 106.5 closing the week, you know. I think we're going to be closer to the downside, but the fact that there has been a bit of technicals doing their job, and that is that famous 50% that you're showing now on the 107.30.33 there. That seems to have done a bit of its job. So we are hanging just above. I wouldn't be surprised that we hang just around it once we really enter the central bank meetings, unless that US CPI gives us something spectacular. The market is going to look for it to come off again, right? That's what the market wants to see.
Yeah.
The market really wants to see that CPI continue to come lower. So my best guess is right here and now, without sticking my neck out too much, is that if we get a number just as expected, meaning a bit more sticky because we are. Oh, look, I lost my. Here we go. My calendar is gone. So I'm going to say if we come out like relatively in line with expectations, which means a bit of a sticky core, slow tick lower on the year on year. I think that's going to be enough to have the people just wait for the FOMC and of what I think looking relatively positive towards the dollar, but it's like really the needle is very close to the midpoint right now, in my opinion anyway.
Yeah. No.
And that's about it really. I'm still not a big fan of euro as such. So but we do expect a bit of news on the PEPP, on the asset management, on the asset purchasing programs. So that could give a bit of a wobble in the euro as well. If they would use that one to come out a little bit more hawkish compared to where inflation is going in the eurozone, compared to where growth data are in the eurozone versus the dollar. If Lagarde and her crew wants to come out a little bit more hawkish, it may be that they use those asset programs as a means of coming out a little bit more hawkish, so we can get a bit of volatility out of that. But it all makes for a euro dollar that could be very undecided until at least tomorrow CPI, but even FOMC, ECB. You know.
Yeah, no, I agree with that. And we're not saying, don't trade. Look at our mate Ali. He's in a gold short. He's doing his usual, scalping off the levels, trading off the level, short euro dollar. Fine. If you've got levels you want to trade, go ahead and trade them. There's nothing wrong with that. But just be mindful if you're in a position running into these big data points and central banks, you've got to ask yourself the question, are you going to be wanting to sit in a trade with 20, 30 pip stops right into those events? So this week is a lot about managing risk. This is a big week, a potentially volatile week. You've seen what's already happened in dollar yen in the space of 2-3 days. You need to think about risk management above everything. If you've had a good year, you don't want to be blowing a lot of those profits in the last couple of days of the year. So think carefully about what you want to trade. Think carefully about whether you need to trade. And think carefully about how much you want to risk on those trades. Maybe just reduce your trade size. If you want to still play the game, reduce your trade size, reduce your risk. Just do it for a bit of interest, for a few last-minute Christmas pips. But don't be putting it all on the line in this very last week. I'm not doing it. K-Man's not doing it. We may, as I said, have the odd trade here or there. We may put on the odd little position just to have some skin in the game for our longer term plans and wider thoughts. But that's the way to think about it now. One pair I want to look at, which no surprise is higher after those CPI numbers. It was already creeping up from last week, but it's dollar China. as I said, it's a bit of a twofold move. This again, a bit of undoing those dovish Fed expectations, which was part behind this drop down as well. But now we're seeing the China side as well looking weaker, so it's a double wind for dollar China. But I thought we might be in the 720s when I came in this morning, but it's just holding below. Haven't managed to nick in there yet. No doubt Chinese authorities will be coming out and wanting to keep this one contained. They were doing so even while we were down here. So they're likely to be in again up here. They don't want this going all the way back up again. But that's the pressure they face for the moment. So I'm still waiting for this break down here. The support's shown up. If we do get a break here, then it's probably going to have some legs. Something's changed and we're going to be heading towards the big 7. But for now, I wouldn't be surprised, particularly this week, if we see a lot of upside pressure coming in and maybe it creeping up a bit higher. So, okay, was you going to...
No, just looking at good levels down there, around 711, 7 there. Wow.
Yeah, right, bang on that fib.
Really good levels down there. I had a... It's very strange because I was planning actually to try and buy it around 711 and a half, and the only day I didn't have my order is when they went to visit it, and and I couldn't get them. I didn't get them. So, but you know that's how markets go. Sometimes we hit a happy trade. The other ones we are getting a bit frustrated with it. And I just want to come back. If you can pull up the gold, or I will do it.
Yeah.
You have a good level there, Ali, on your stop, I would say, because I was talking about those levels in the 207, 209, or perhaps I will show it because I have the trend lines. If you want, Ryan.
Yeah, got it, mate. I'll hand it over to you. Give me a tick. There we go.
Cheers, mate. Okay. You see, these were the levels that I was looking at last week, and it is around that 207, 206, 207, 208, right? So this is actually pretty cool. If you're just above, if it goes back above, we may stretch a little bit back into those 2020s. On the downside, where are you? 83? Yeah, that's is it 83? 86. Yeah, that's giving you enough leeway. I think if really this break now below 2000 is confirmed, we may go 77 or even down to 1970. But yeah, of course. I mean, if you're nicely in profit, why not take it as we said and relax a bit into the big week that we are going to have. Right, let me quickly look at a couple of things, and I'm going to concentrate on one pair in particular, which I am paying very close attention to this week, because I think there is a potential for a big move there, since we have already been relatively quiet in there for a while, but starting to pick the direction. But first of all, cable. I think it's going to happen around 125 and a half. So whether you're below, we may see a little bit of acceleration for another 50, 60 points, 50, 70 points. And while we are above, this looks, well, I don't like to trade off this wedge this morning because we're just entering the big week. So this could go up another leg to 126.10, 126, yeah, 15 even, without really the picture changing anything at all. What I do note is that on the euro sterling front, we are building a bit of a box here. Could be a bit flagging this one, and we are seeing offers every time we come up to those high 85, 80s. We are already seeing offers. So going into ECB Bank of England week, the what Ryan was talking about tomorrow morning, the labor report, and then we are going to get a few expectations in Euroland as well, I reckon, before the ECB is out. This could be a good mover on the week, really, especially if we start to break above this, then start to tackle this 86, 15 again. It may mean that this move is done, okay? And then on the other side, it's relatively straightforward around 85.5 as well. So if we start to break this after, because before ECB and Bank of England, anything can happen, a big reversal as well. But if we start to break this after, then I reckon there's a very fair chance that we are going to get those lows back. But it's starting to build a very interesting little range here that is going to be, I reckon, closely watched by a lot of players. Euro sterling, you take away the dollar, you take away some uncertainty, some possible volatility on a dollar move, you know. But in the euro sterling, this is really going to be about what's happening in the UK and Euroland, and this could be a very interesting one as well. So this one is going to be high on my list of things that I'm going to watch over the week. And the other one is going to be dollar Swiss, because I've been talking about it already, and look where we tested this on Friday. We went right up there to this 88, 15, 20. This is going to be the magic level, in my opinion, post SMB, right? And SMB, the good thing with SMB is that will be after the FOMC. I would have hated it if FOMC would have been after the SMB, but since we have the SMB after the FOMC, wherever we are, this is going to be the magic level, I think, 88, 15, 20, okay? Move above, then I reckon there's at least a big figure to be done. If we get a Jordan which says, okay, we are there, we don't need to buy Swiss franc anymore because the inflation is there and the numbers, the economic data are where we want them to be, there is a possibility that really Swiss weakens materially. And then you look at dollar Swiss on the one hand, because it will have had FOMC, but then there's other crosses also to look at. You can look at pure Euro Swiss. You can look at, I know people are looking at sterling Swiss. I know people are looking at Canada Swiss and stuff. But for the dollar Swiss, this is going to be your magic level. And for the Euro Swiss, it's going to be, I think, if I recall well, just above 95, is it? No, it's a bit higher here around that. This is higher because of the euro being a little bit weaker, but it's going to be around 95.5, 95.70. That's going to be the big level there. If it starts to go higher, then the situation in the Swiss will have changed. Okay, so those are a couple of things that I am looking at to start the week, and then another one. And I know for those who watch emerging markets is the rand. It's really underperforming everything. And I reckon there's like a lot of reasons for that. First of all, you have a bit of dollar strength coming back into the market, but then you have the Chinese situation, also the Russian situation. You know that there's been South Africa getting a bit closer to China and Russia, so that will have an impact. And then there is stuff going on in ESCOM as well. So I think the CEO got the boot there. And other times it may be a positive for a currency if you get rid of a CEO of an ailing company or stuff where it goes badly. But in the rand, they're just bringing back an old guy, and the guy who was already in ESCOM, and I don't see where it's going to change much. So the market still seems in punishing mode. Okay, so going into this week, this is going to be one not as firm as dollar Swiss or euro sterling maybe, for instance, and euro dollar obviously, but this one is another one. If you get anything less dovish than dovish, real dovish from the major central banks, perhaps the rand could suffer even more. And really, that's to start the week. That's okay. For those who are looking at silver, we are below, sorry, we are below this 23.5. I think there's a possibility to go and have a look at the low 22s, perhaps low to mid 22s before we take off again. But there's been a big washout, a little bit in line with gold, but gold is doing a little better. I think it has a lot to do with liquidity as well in the one and the other. And people perhaps already looking at possible more slowdowns, but I think it's a bit premature. I'm going to be interested to probably reload just a little bit of my long-term stuff that I let go on the way up here. Looking at a few things here. And with that, Ryan, back over to you.
Thank you very much, mate. Well, that's got us ready. A nice quiet day today, and then it all kicks off tomorrow. And just remember that a lot of these central banks are about setting the tone for what's going to be coming next year. So have one thought about that rather than the price action and what it means for the price action right now. It's all going to be about what comes next year. So anyway, hopefully what you set up for the week ahead. Tomorrow we'll have a deeper look at some of the odds and sods that we've got coming up. And till then, have a great week. Have a great day. Thank you, K-Man, as always. And we shall see you all bright and breezy tomorrow. Have a good one.
Cheers, guys.